Hello, hello, world. Good morning, ladies and gentlemen, everybody. Morning. That could have been loud if I was clapping into that. I do apologize. All right, so we'll get started here in just a bit. To be completely truthful, I haven't really looked at a whole lot this morning. Kind of an awkward start to my morning here, but gonna be running. As soon as I get off this stream, I'm gonna be running out and about. So I won't actually be online trading myself today. Can you check I? Yeah. Nelson. Interesting. Alrighty, so let's see. So there's been a 2-day jump. So the stock got hammered a while back. So right now it's just based out. And so you're going through probably just a bounce short squeeze kind of situation. Yeah, so I really isn't in a situation to have a really big long day yet. You need to get I up and over 740, 750. Yeah, so I is really not a big long play until you're getting over about 750. Once that happens, then I'd be more pressed to be following it long. So there is a nice pop that started, but ultimately it needs to get over 750 to really be something special. Did have a good day though yesterday, that's for sure. Yeah, nice movement. Oats and hoes. What do I think about Tesla? Because it broke all-time highs. Yeah, that was actually kind of impressive. I didn't think we were going to break all-time highs that easy on Tesla. But, every once in a while you always get thrown a curveball. So, for me, Tesla now needs to... Well, remove drawing. Yeah, so now that Tesla's broken all-time highs of 395, we need to now see it consolidate and stay above 395. So if it can't, so the all-time high break isn't really anything unless the price action can stay above the all-time high. So the all-time high was like the 386 mark, 387, or more, it was actually 389, excuse me. But so ultimately, what the price of Tesla needs to do now is stay above that. So if we get a pullback day or some days of consolidation, ideally we want to say it stay around pretty much any of these tops, right? We kind of want to see it stay within this zone. And then we'll know that the all-time high break is somewhat legitimate because this was a really big move into all-time high. So it wouldn't be surprising to see a big pullback one of these days. But ultimately, as long as Tesla can stay kind of in this zone from 381 to 389 and above 389, then it's probably a legit all-time high break. So I would probably follow it long bias still, just because there's a lot of FOMO traders that are trying to continue buying this up, and they might in fact continue to do so. But for me, again, I wouldn't really be trusting it in the sense of buying it up over the all-time highs unless it can successfully hold the all-time high. Penny stocks, there wasn't really, again, I didn't really look at a whole lot this morning by the time I got on, so I'm a little bit, kind of off balance this morning, but there was like PRTLK or PLTK or something like that. That was a garbage penny stock this morning. That was really the only one I was paying attention to. Somebody said look at MIRM. Yep, so MIRM... had a really explosive day yesterday. There's a couple reasons why it did that, but ultimately it was just a bounce, a long play, and a big short squeeze multiple times throughout the day. Yeah, I would follow it today. Well, let's see. Hold on. Yeah, I would follow it. If the price action starts to break below 22.46, which was the previous high a day from a couple days back, if it starts to break that or, kind of break the support from yesterday at like 21.80, then I'd probably just stay away from it. But initially, I'd probably remain watching it long bias for the time being. Now, do note that we've had 2 really big running days on MIRM. It's very unlikely that you see a third big running day, so do keep that in mind. The stock is now hard to borrow, so you're not getting the ease. So now that the stock is hard to borrow, for most traders, at least those using Thinkorswim. If you have some type of interactive broker, then you might be able to get shares as short, or you might be able to pay for location fees to get shares as short. But inevitably, if you're on TD Ameritrade, which is the most popular platform used by most traders, and it's hard to borrow, then you're not getting those new or retail traders shorting the stock as much, which then makes the short squeeze capability far less. Thus, stock is more likely to go down. A lot of you probably have no clue what I just said, and that is okay, because one of these days I will make a video on it. That's the video I was talking to you guys about a couple weeks. I've been waiting to make that video because I want to back test what I'm saying longer. And the more that I keep waiting, the more that I keep seeing these scenarios play out. Anyways, so MIRM, I would just probably watch it on standby and don't anticipate it's going to go on a crazy run like it did yesterday. It could, but probably not. Okay. Yes, good stuff. OPTI. Yeah, I'll look at OPTI. OPTI. That's a dud. You're not going to want to trade that. ATVI, again, ATVI, I'd only trade it for the gap fill. Did it do the gap fill? It did not. So we did get up and over previous highs. We pulled back a little bit. Yeah, we still haven't. I mean, we guess we kind of broke out there and tested there. I would be long bias on ATVI for right now. Just ultimately long bias. Is it going to drop a little bit today? Could. Again, we never really got a big retest of the breakout level, so we could still be looking at a retest of the breakout. But ultimately, I'd be long bias on ATVI, looking for ATVI to do the gap fill up to about 62.50. Short Roku, possibly. I'm imagining you could short Roku today one way or the other and make money. Yeah, so you're probably looking at Yeah, Roku is curling down right now, absolutely. So yeah, you know, logic says probably look for a down move rather than a long move. So yeah, I would probably play the downside of Roku today, be short on that. For now, at least. It could very well change, but for right now, things are pointing to the downside on Roku. ONCY, we'll take a look. Huh. One up. Fail. Double top fail. That makes sense. Big move. Over the 200 moving average. That's nice. Yeah, I mean, ONCY really started losing all of its volume yesterday, pretty much late day, which makes sense. Again, it's pretty normal, but wouldn't be trading this unless it's long over the $2 mark. So you see how it went, and so like, yeah. So you see how it went over 2 yesterday, then right back under. So again, I wouldn't long as it goes over 2. I would long as it goes over 2 and stays above 2. See, like in this scenario, if you would have waited for ONCY to break out of $2, just like Tesla breaking the all-time high and then retesting the all-time high, showing you that it wants to be above the all-time high, would be the same scenario as ONCY breaking over $2, not buying it, waiting to it retest $2, and if it wants to stay above $2, then you look to get long on it. That would have saved yourself from buying above $2 and then getting smoked as it comes and crashes right back down below $2. So for ONCY, I wouldn't trade this unless it was over $2 and staying above $2. PRTK, that was the ticker I was talking about this morning. So there's going to be a lot of eyes on this one. This is where a majority of the retail trading markets probably at least had some interest in, was PRTK. So again, probably not going to be a good trader for the day. I don't know for sure. Well, hold on, replay it. it's most likely not going to be a good trader for the day. On my system, it shows that it's a hard to borrow stock. So it's possible some people can short this just regularly, but probably not. So ultimately, at the end of the day, this is probably going to be a dud. It probably won't be that good of a trader. The only thing that you could hope for is just that by the time it opens, it maybe does a small drop, or, I mean, really you're just hoping that it squeezes up. But again, it's not a typical good formation or pattern that would lead to a good day. If it does lead to a good day, it's going to be because of a random squeeze or pop that happens. But so to speak, it's really not set up for a good day so far. So far, if you look at the market, the whole impeachment thing, there hasn't been a big drop. All right, and that has been kind of a scary or worrisome. The market hasn't been affected too much in terms of really big price fluctuation or movement, but at the same time, we haven't really gone any higher. So again, I don't necessarily think that impeachment has to do with anything in regards to this consolidating. I mean, if it goes to the Senate and he's actually rightfully, again, when I say rightfully impeached, then we might see a down move, right? And when I say rightfully impeached, it's because going to the Senate and having a trial with factual evidence is the only way that I can trust what's going on in Washington, D.C. If Republicans tell me something, I don't trust it. If Democrats tell me something, I don't trust it. We live in a government system where basically you shouldn't really be trusting anything a political party tells you at this point. And it's been that way for a couple years. It just appears that now maybe some people are becoming to be a little bit more enlightened on the charades that go on in D.C. So again, if Republicans tell me one thing, great. If a Democrat tells me one thing, great. I'm going to go research for myself and probably come to find that there's an agenda behind both of their remarks, and I probably shouldn't listen to either. So again, I'm really hoping that when this all goes to the Senate, it's truly a bipartisan trial, unlike the partisan fight we've been seeing over impeachment so far. There's nothing bipartisan about this. It's all politically motivated on both sides so far. So again, nothing to be trusted in D.C. right now. Hopefully the Senate comes through and really has America's back, and they do look at evidence, they do look at both sides, and they do make an informed, educated decision on whether or not to elect the duly elected president. Hopefully that's the case. We will see. When that happens, then maybe I would be more inclined to see some type of fluctuation in the market if he is impeached or if he's not, right? But for now, we have like this 3-day consolidation, right? It's more like 2-day consolidation. You can see we're dipping a bit pre-market today. So what this tells us over the past couple days is based on where the price of the market is, we're not going up, right? And there could be a couple reasons. Not enough people to buy, not enough shorts to squeeze out. So ultimately, I would assume that we're going to go through maybe a little pullback today down to about 318, which would be this previous top, and then we kind of try and bounce a bit. Yeah, that's basically it. It's either a pullback. I don't really see us breaking out today. I mean, we could, but again, the breakout will happen over the 320 mark. The breakout would probably be a little bit easier to happen if we do pull back down to here to 318, allow some traders to gather in more shares on a dip, allow some more traders to short the market thinking it's going to have a small correction, come to find they're wrong, and then use their buying pressure to squeeze out the market into a new all-time high. That's a very good possibility. So anyways, markets not really doing whole much regarding the whole impeachment charade so far. Micron's something good to talk about because Micron had earnings today. So if we look at MU, MU pop. I mean, basically, I would just be long bias on MU today. If MU can get up and over the pre-market high and close over, hold over successfully over the pre-market high, I look to be long over that. If it starts to break down and hold below the pre-market support here at about 54.50, then I look to be short on it. So until we really start breaking out of the channel of the pre-market high to the pre-market support, you're not going to really get crazy breakouts, right? You get a channel. You have a dollar. You pretty much have a $1 channel from 55.40 to 45.50. So basically, yeah, 54.50 to 55.50. You have a $1 channel. Above and below is where your bigger moves are most likely going to happen on that stock. XOM as a long-term dividend. I mean, I don't know. I really don't know. The XOM, is that Xerox? I believe XOM is Xerox, if I'm correct. Oh, no, it's ExxonMobil. I don't know why I thought it was Xerox. What is Xerox? X, like EXR? I don't know. Yeah, I mean, oil. So this is the way the oil market works in a sense, is when you're buying any sort of oil company, ideally, you're not actually investing in oil. What you have to understand is when you buy oil, or you're buying Exxon, right, or you're buying BP, and you're buying these big oil companies, really what you're trying to do is buy power. And thinking of it like that is always better than thinking of buying gas, because right now, currently, oil, gas, it runs the world. It really does. And if you already know where I'm going with this, then you know that the next thing to come out of my mouth is the United States has gone to war a couple times. Well, pretty much the Iraq war was all about oil. Okay, so pretty much our United, and again, there's a lot of ways to look at this. So for one, the United States government basically killed its own people to go to war for oil, a commodity. That's what happened, right? It wasn't really because of terrorism, and it wasn't because these terrorists over in Iraq or whomever, these boogeyman people were killing their own people. And maybe they were, and maybe it was bad, but at the end of the line, that was just the forefront excuse as to why we went to war. The real reason we went to war was for oil. And now people can think that far. They can understand that, and they can get behind that. But as you go further down that rabbit hole, the truth becomes much harder to stomach for some. So the real truth behind going to war in Iraq was for the oil. So whenever you're buying Exxon or BP, you're not really buying oil, you're buying power. And whenever that power gets eliminated, your investment's going to be worth nothing, just like anything. So do note that if you buy gas or buy oil, if electricity, solar power ever becomes the new norm, then obviously those companies are going to go out of business. Now, there's already been rumors and kind of little trails that lead back to oil companies or people trying to stop the development of efficient energy so oil can remain in power. And there's also been talks of, like, I can't remember, maybe I can find the article one day, but anyways, that's a rabbit hole we can't go down for now. But again, when we went to war in Iraq, it was for oil. And now everybody always goes, God, the United States, and I've said it too, the United States, we're such bullies. We went to war in Iraq to protect the U.S., to protect oil, and that's wrong. And you killed Americans for doing it. I don't agree with anybody's life, being put at risk for oil, right? But if you break it down, maybe you do, right? People would say, we shouldn't go to war just to protect oil. Okay, well, if the United States hadn't gone to war to protect oil, and note, they will always, the United States will always go to war and risk lives to remain the world's superpower. The United States is the world's superpower because the biggest commodity in the world, that is oil, is all traded in United States dollars everywhere. If oil is no longer traded in United States dollars, United States no longer is the world's superpower from a monetary standpoint. Military standpoint, we can argue we still have the greatest military and strongest military of all. Cool. Great. But there's no need to have a really big, strong, beefy military if there's no reason to use it. And our military isn't going to be used unless the lives of the Americans are being threatened, or we need to protect us as the world's superpower. So with that being said, everyone complains about America's being bullies and always going to war. And true, but if we don't, and if they don't go to war and they don't protect their place and position in the world as the world superpower, your United States dollar is going to crash. And then what's it going to happen when you go to the grocery store and go to buy a gallon of milk? It's going to cost you $20. So yeah, you might be a little pissed off that we're always at war and we're always going to war for what seems to be stupid reasons. But behind the scenes, if we don't, the cost of your living is going to skyrocket because your oh so great, friendly, smart United States government has $21 trillion in debt. And the only way they can keep themselves ahead of that wave of having to either default on the debt, pay back the debt, or have total economic collapse is by staying the world superpower and making sure that the number one biggest commodity that's needed and traded around the world is only traded in the United States dollars. Everybody having a good morning when you get blasted with that much information at 8, 9 o'clock in the morning before you even had breakfast and lunch, whatever? No, because they're not going to tell you that on mainstream media, but that is the case. That's why we're the bullies. That's why we intervene in all these problems, right? It's kind of like this, right? It's like, I know that everybody watching the stream, I know that I owe all of you guys $100 a piece. But as long as I keep intervening in your life and making it seem like you need me, you may never come and try to ask for your $100 back. So I'm going to try my best to get ahead of the reasons that you would want to come back at me for my $100. But if I stop providing value to you guys one way or the other, it wouldn't take much for you to say, Connor, can I have my $100 back? No. But if I'm always there and always have your back and your brother starts to piss you off and I elbow your brother in the face and get him out of your room, your mom's bugging you to clean the dishes and then I come and clean the dishes for you so that you don't have to do it and then you thank me, then you won't ask me for the $100 back. That's kind of the way our government goes to war and works in all these foreign policies. Okay? That's what you need to understand. All right, let me continue on. I know that was a little bit and a lot of it. All right. So, what do I think about ExxonMobil? I think it's a great buy because oil is the world's biggest, kind of traded commodity, and everybody needs it until they don't. So it's a great buy until no one needs oil. That's pretty much my whole spiel. That's where I could have just said that in the first place, but it sounded way cooler doing it the way I did it. Do I think impeachment will crush the market? So, I mean, we could look at. Sorry, guys, I want to answer this question. This is another hot topic, right? Do we think impeachment will crush the market? I mean, no, not really, right? So if the normal was that impeaching a president, which I think it was either Nixon or Clinton, I think when the impeachment happened, the market went down, quite a bit. So let's say that history did want to repeat itself in the sense of the markets going down. History will not repeat itself in the manner of how the impeachment played out because I think Nixon resigned. I don't know and then Bill Clinton was actually impeached. But either way, both presidents never came back for their second term, or Bill was already, I'm saying they didn't have the opportunity to run for a second term. What you're seeing right now, even if he's impeached, he's going to run again and he'll get reelected. So if there was the scare for the markets to sell off because this person is impeached and then would no longer be president is the sense of a market drop, then in theory it wouldn't happen this time because he's most likely going to get reelected. And I don't say that because I'm a Trump supporter or anything like that. I say that because it's just blatantly obvious. And if you don't see that already, I don't understand how. You might be listening to mainstream media too much, the wrong mainstream media, I don't know. But it's pretty much blatantly obvious that right now there is a greater chance of him winning re-election than any other candidate. And there's still a better chance that he wins re-election even after getting impeached over any other candidate. So if a president can get re-elected after being impeached and still have a better chance at over any other candidate, what does that tell you? So that's the thing. So in the sense that the market would sell off because the guy's no longer getting president, maybe. But this is a little bit different than all the past times because he has the opportunity to still be president. All right. Ryan, nah, dude, and again, we can't get into 9/11. We can't get into 9/11. 9/11 again was not just a couple guys flying an airplane. Let's just be real about that. All right. Whoa. A lot of comments. Sorry, a lot going on here. Do I think PCG would be a good short today? Well, I was saying to watch PCG short yesterday, so I'm going to go with probably a no because the short would have started yesterday. Yeah, so I said watch PCG short yesterday, and it had a decent down move, nothing too crazy. But no, I wouldn't really watch it. No, probably not. I probably wouldn't watch it short because PCG filled the gap yesterday down to 11. Okay. If it can break below 1140, hold below 1140 with really bearish volume, then yes, maybe take a short. But as long as it's staying over 1140, I wouldn't be getting short on it. Wow. Well, you know what? Those of you from Venezuela, I pray that things turn around for you someday, and I pray that it never happens here. But it probably will. Probably it will. It's almost inevitable. What do I think of Rad Rite Aid? A lot of people, actually, a couple people were mentioning it today, but I don't think it's. Oh, they had earnings. Okay, so that's why. I would probably short Rad today. Yeah. I don't even know if you can short it on Thinkorswim. But yeah, I'd probably short Rad. I would first watch it long out of the gates just because it is more bullish right now. There's probably a divergence, honestly. Yeah, there's a bearish divergence, so I'd probably look for maybe a quick long pop in the morning, but ultimately I would have a bearish outlook for it right in the morning as it opens up. You're seeing a bearish divergence going into the open, so I'd look for like an early morning panic drop probably. Thoughts on gold? I've been buying gold like crazy, actually. I don't want to say crazy because it's not like I'm buying like millions of dollars, but no, I mean like for an average guy, I mean I'm buying a shit ton of gold, a lot of silver too, every week, pretty much. So yeah, like my Robinhood account, like I think it was like 2 months ago, maybe my Robinhood account was like $300, and I was like, why don't I just slowly just put some money in here and just start buying gold and silver? And it's like, all right, cool. So I started just putting like $250 here, $300 there, $250 here, $500 there, $1,000 here, and it's just slowly dollar cost averaging it. So I've been buying gold pretty much. Let's see. Yeah, I've been buying a lot of GDX lately. I've been pretty much buying gold since here. This whole consolidation, I've been buying gold. So I've been a part of those traders in there holding this consolidation and making this support level. So yeah, I've been buying gold for the past 3-4 weeks. Just buy more, and I plan on continuing to do so as well. But yeah, I mean, if you look at GDX, I mean, GDX is. It definitely appears like we're going to have a breakout in the gold market, just in a sense from technicals, but in a sense from like not political standpoint, but market standpoint. Yeah, the markets are going to go bearish eventually, and then when that happens, gold's going to go popping, and I'll be 3 years ahead of the trend. So yeah, I'm well ready for a downturn in the market or bearish times for commodity prices to go higher. So like when you look at this chart, right, what does it tell you? It tells you up, correction of 08, then gold bounce, right? Now look at so yeah. Now that kind of raises another question. People are like, well, like look at that down move in the market. So even when we had a down, even when the market's corrected, gold still went down. It went up afterwards, right? And the same thing happened with GLD. And so at the end of the day, what we're looking at here is look at this. We have a nice strong push, consolidation hold, strong push again. Pull back, consolidation, hold. So right now we are in fact forming a cup and handle formation for a potential breakout in the gold market. And this is GDX, so this isn't really the gold market. This is an ETF, but you have a cup and then you have your handle starting right here. So there's a good chance that we're going to have a breakout there in the gold market, right? And just think about how long, right? Think about how long this consolidation's been. From here, the top, this was September. So we're midway through January, so we have September, October, November, and almost December. So the top of this move here to where we're at now, it's been about 4 months, right? Most analysts now are calling for a recession in 2020. Let's say that they are correct, right? That gives us another what? What are we, December? So let's just say we have another year's time, and we have a recession, right? So if this move here was almost 4 months, we can project that another couple months, another 3-4 months might bring us back up to these highs, right? And then we'd almost be at about a year. You got another 8 months to go there. And then what happens? So just based on how slow the gold moves and the projections for a market downturn, right? I think we're on path to see gold have a nice move. So yeah, guys. So again, I got to run. I got to get out of here. So again, I didn't get to go over every single stock. Apologize about that. But again, the most important thing to understand is, with the big spiel that I had there earlier, is though that, again, though that we don't like going to war and though we don't want to lose any lives, you got to ask yourselves, do you guys like paying, right? Do you guys like paying $2, $3 for a gallon of milk, right? Do you like going to the grocery store and being able to spend $150 and maybe feed yourself for 2 weeks? If the answer is yes, then you yourself just agreed and don't mind that you go to war for reasons of oil and world superpower. You agree with it. If you can if you can get behind spending $20 for a gallon of milk, then you guys agree that we should never go to a war again and never worry about protecting ourselves as the world superpower and then letting the Dutch just cripple our economy. That's where we stand as a country. We go to war and we do these things to protect our best interests of our economy. And in doing so, it might result in going to war to help make sure that the consumer isn't spending $20 on a gallon of milk. So, do you like us being the bully or not? Choice is yours. And I'll leave that right now. Everybody, have a great rest of your day. Take care. I won't be online trading today myself. As soon as I get done here, I will leave the scanners up for you guys. So do note that. This will be back online here in just a sec. Everybody have a great day, and I will see you guys tomorrow morning.